What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be checking in on our broad market, notably some monthly charts there now that February has wrapped up. We'll take a look at our core list of companies as always, and this week I've got 4 additional trade ideas to share with you towards the end of the video, so definitely stay tuned for that. As always, anything we are associated with is linked down below in the description, and without further ado, let's jump right into these charts. Kicking things off on the SPY monthly time frame, talking about candle structure and location as we always do. And by the way, we're looking at the second candle in, not the month of March, but of course February, now that it's been closed up. We certainly have a hammer candle, right? The lower wick would make that fairly easy to identify. The buyers stepped up at the lows, pushed it a little bit higher, and that would indicate some buying pressure, right? But please don't forget that this is a red hammer. The buyers were not able to take it through the open and close relatively strong at the highs of the overall monthly session. Again, the red body would indicate, and the upper wick even would indicate, that the sellers stepped up here and kept prices more middled as opposed to strong up at the highs. So it might be easy to visually identify the lower wick and just immediately say, oh, buying pressure, it's got to be bullish, right? But don't forget about the other half of the story, which of course is the red body. That's all I'm getting at from the structural perspective of the monthly bar. In terms of location, if we think about this and this, we do have a lower high, and we also have a lower low. There's no way around it. That has to be bearish. Whenever we have lower highs and lower lows, those are hallmark signs of a downtrend. Now, that's in the short-term bar-by-bar perspective. Something interesting, though, that I do want to point out is if we come in from the lows all the way up to the highs with our Fibonacci's. Remember, we're always using this on an intraday basis, a daily basis even. We don't often think of it on the monthly, but look at this, right? Where's your 38.2? It's way down below us, closer to 380. Traditionally, we classified the 38.2 as an area of healthy pullback or bull flag consolidation before continuing on our merry way. So yeah, on the smaller time frames like the daily, the weekly, even on an intraday basis, this does feel like the world is ending, right? And the selling pressure is really hot and heavy. But in the grand scheme of things, from the monthly, I mean, you can't really say that it's much more than just a bull flag that's panning out. Maybe it breaks to the upside, and we're only going to be more definitively bearish, again, from the monthly time frame. Let me be clear about that. You can trade both ways intraday, that's fine. But from the monthly time frame, things only really get bearish if we can't hold up at the 38.2 if this pullback continues in the first place, right? So a little bit of perspective here on our monthly time frame is what I'm hoping to achieve by sharing this information with you. Let's drill down to the weekly now and talk about some more granular levels. Obviously, we have the daily, where a majority of our analysis will come from, but here is your head and shoulders pattern, right? There's your neckline. Remember that last week we did have a fake break. We printed a nice strong green hammer candle as opposed to the weak red hammer that we saw on the monthly. And traditionally with the green hammer, right, you can look for a long entry up and over the high, indicating that the buyers are continuing the move here. We got a little bit of a move above the high, but it was not sustained, right? We immediately fall back down and we are still inside of the prior week's range. The upper wick on the weekly candle is also much larger than not only the body, but the lower wick as well, right? So there was some substantial selling pressure, and you can look at this move up above the prior week's high as a bit of a fake reversal, right? This is not a reversal as of right now. So the question still remains, is this neckline going to hold up? Currently, from the weekly bar, you can see that it has, but this doesn't look too promising, right? This is rather indecisive, maybe slightly bearish with the fake break to the upside, but there are some things we'll look at on the daily in just a moment that'll give us clear levels to trade off of. So that's what we're seeing here on the weekly. I suppose we shouldn't delay it any further. Let's just go down to the daily now, talk about those levels and nuances. Apology for the little, I'm sort of thinking as I'm doing, right? Anyways, on the daily time frame, what do we have here? The most important thing to note is what happened this Thursday and Friday, right? Here you go. We gap up and out of the prior 4-day balance, and we immediately fill the gap below and fall and accept back down into range. We would classify that as a look above and fail. The target is always the bottom end of the range. Now, what happened on Friday? We did achieve the bottom end of the range, so that trade is technically complete. What type of candle printed on Friday's session? Certainly a green-bodied, small body, but still green nonetheless, hammer candle off the low end of the range. So hammer off of support. In my eyes, I'm thinking bullish, right? We've been seeing choppy action, day up, day down, day up, day down, day up. To me, choppy action in here. If we hold at support, we're looking for a little bit of follow through into these pivot highs here, roughly 440. Maybe it's the resistance trend line this time around and we get all the way there. I'm not entirely sure, but as of right now, the market is extremely choppy. I would look to play in this chop, aka long the bottom, sell the top, long the bottom, right? In terms of a short, right? You cover down at the bottom, right? Play the ping pong trade until we firmly break out of range. As of right now, this hammer is going to give you excellent risk reward. It's long over the top for the resistance trend line. Stop can either go, depending on the nature of your trading, you can either put it here if you're a little bit more of a swing trade style, person. That way, if we get a higher low pullback, you're sort of protected from just an immediate fake out. Or if you're more aggressive and just looking for day trades only, you look for the longs here to the resistance trend line with a stop somewhere here, right? That way, if it falls back down and gives us a lower high, something that looks like this, you're not subject to the possibility of a larger breakdown. Okay, so that's a couple of ideas to the upside here. Again, I want to be abundantly clear that the market has been extremely choppy here, but the hold on Friday of this very important level, 429, there is still possibility that this produces a higher low. We have our sets of highs. We now just need some follow through to the upside for a higher high, thus reversing the daily trend. Okay, so that's what I'm thinking about here on our S&P 500. Since we have the Fibonacci's engaged already, let me illustrate as well. Your 38.2 is the low end of the range, so this is well within the range of healthy bull flag consolidation. Watch for the breakouts, right? That's what we're seeing as of right now. In the case of a downside move, right, this is how we're going to watch it. If it rolls over for, again, a lower high, and we reattempt 429 in short proximity of time, could be 1 or 2 days from now, that's a flush, right? And the flush should take us to the point of control from the Thursday breakout day. We covered this multiple videos ago. That's at 417.50. Anything below that is obviously your low of that day. The opening print, roughly 410.65, right? There's a couple of other trades in which this could unfold. So let's say you missed the initial break, and that's fine, given that it's a choppy marketplace here. I wouldn't fault you for that. But if you see something that looks like this, there's a short opportunity as well, right? What did I just draw in? Well, we have a break, retest of the level, 429, then you look for follow through to the downside. So you can get short on the back test of 429 or short on the flush of the low that was set in on the initial break. Okay, so those are two ideas to the downside as well. Again, given the choppy nature of the market here, be prepared for back and forth and be open to changing your mind multiple times throughout the course of the week. That's what I've got in our S&P 500. Let's continue along and get into our QQQ. If we take a look at this chart, let's actually do what we did on the SPY. We'll go out to a monthly. We'll talk about all of the same things. Okay, so monthly structure, we're on the monthly chart. Same exact deal, right? We do have a red hammer candle. All of the same things apply. Buyers stepped up, but don't forget that the red body would indicate that the sellers are also still exerting some pressure, closing closer to the midpoint of the range. We have a significant lower high, and we also have a lower low. Bear trend, right? Let's take out the Fibonacci's from the low of the sickness all the way up to the highs. This one has already come into the 38.2. So in your QQQ, this is kind of a must-hold level, the monthly low from February. It's roughly 316, we'll call it, just for round number's sake. That's what you need to see hold. Otherwise, this could start to turn into a more nasty move in tech, right? If we give up the 38.2, then who knows? Maybe we do something like this and roll over to get to the 61.8. That's generally the next one that we're watching out for. And coincidentally, it's also monthly structure from right around in here. That's roughly 260. Again, I'm not anticipating that that's a likely scenario, especially given the lower wick off the 38.2. We'll see, but it's just something I want you to be aware of, okay? So that's the monthly time frame on the Qs. Going down to the weekly, getting rid of those fibs. What do we have from a weekly perspective? Again, same sort of idea. Failure to accept over the green hammer highs, fake break to the upside, no reversal underway. We cannot target these up here until we now take out this week's high. That's kind of how that would work here on the weekly. Again, a more bearish candle as opposed to what we saw on the SPY. So definitely a large upper wick, red body as well, tiny little lower wick. That obviously has much more bearish implications as opposed to just sort of a doji that we saw on the SPY. So a little bit more relative weakness here in our QQQ. In terms of the pattern, the head and shoulders, this one's not as clean. You could call it something that looks like this. Again, where's your neckline in that instance? Is it here? Is it horizontal here? There's a number of ways to look at it. I would just stick to horizontal levels at this point in time in the Qs, at least on the weekly, and say that this level is now acting as resistance on the back test, correct? So much more bearish in terms of the short term in our QQQ. Let's continue down to the daily time frame, pop our levels on, and start talking about tradable ideas and setups into this upcoming week. So you can clearly see a difference here in our QQQ in the sense that we have broken and firmly closed below the bottom end of our balance. Again, this is much more bearish. So relative to weakness, as I'm sure you can tell now, in the tech sector. We'll take out the Fibonacci's from the low up to the high. We have a close underneath the 38.2. Again, another bearish implication there. Let's get rid of those fibs and talk about levels. Obviously, just like in the SPY scenarios, anything that does this is a break and retest. You can either look to short this 340 level if we print like an intraday double top, intraday head and shoulders, even if it's just a simple inverted hammer at that level, that's a short opportunity with a stop above the high, looking for at least the low and then follow through to the downside, the point of control from the Thursday breakout day. It's also the low of the Wednesday session at 329 becomes the first target. And then after that, you're monitoring for continuation into the Thursday low at 318.20. We covered the bearish scenarios first, obviously, because this one has already broken down outside of its range. If it's going to turn into a look below and fail, it has to do this relatively quickly, and it must accept above 340. In that instance, you always target the top end of the balance. So your area to target would be here at 348. In doing that, it would break the resistance trend line sideways through time as opposed to strongly through price. On this gap up, if it was going to be a strong break of the resistance trend line, it should have gapped, either filled the gap, not filled the gap at all, and then made the move to the upside. So I would be careful and not really look for a major reaction if we break the resistance trend line this time around, given that we're getting into it sideways through time. Generally, probably something like this, and then if we break the range from there, your larger breakout can resume, or start rather, up and over the top of the balance, which is 348. After that, targets to the upside, we will have overhead resistance right overhead. Don't forget about the importance of this level right here, roughly 353. After that, it does open up a little bit into here, and I would probably look for the top, the double top here, if we get the upside rotation, right? Looks to be not the probable scenario based on everything we've discussed so far, given we're breaking down out of balance. But again, just like in the S&Ps, we have a day up, we have a gap down technically, but a day up, a day down, a day up, a day down. It's very choppy out there. Be willing to change your mind and don't overstay your welcome on any trades that you decide to take in our broad market. Let's go on over to our IWM and do the same exact process once again, starting on the monthly. What do we have in terms of monthly structure? A little bit different here, so let's draw it out. We do have a green hammer candle with a much smaller body and a nice solid little lower wick. Again, this would imply that the buyers stepped up, took it to the open, through the open for a relatively strong close. This is in contrast to the weakness that we saw in the SPY and the Qs. Another interesting thing here is that yes, we do have a lower high, but look at your lows. They're relatively equal. So another checkbox for the neutral camp to maybe slightly more bullish in the IWM and small caps. Now I will continue to maintain that this right here is still your breakout level. It's 208. We've been discussing it on the weekly, the daily for what feels like years now. It's only been a couple of months, but it feels like years. That's got to be recaptured for this to turn into a look below and fail. In that case, we target the top of the range here, roughly 240, right? So that's a possible, monthly situation to watch out for. Let's also take out the fibs from the sickness lows up to the all-time high, and again, a nice hold of your 38.2. So it did make it there, unlike the S&P 500, but more similar to the QQQ. Equal lows, again, if we can take out this high, basically the 208, if we recapture that, look for the move to the top of this range. That's what I would say from the monthly time frame chart. Let's continue on down to our weekly and keep this on a roll here. From the weekly perspective, again, a bearish candle. So an inverted hammer, larger upper wick, red body, little tiny lower wick. So yeah, we do have a bit of a failed reversal once again on the weekly time frame, right? You can see the green candle high, we took it out, very little time was accepted above, and we closed back down inside of the range. So to me, more neutral here now that we dig a little bit deeper and look at the weekly time frame, not feeling as bullish as what we just saw on the monthly, correct? To me, again, it all stems back to that 208, which is roughly right around in here. It's the prior support of the balance as well. So let's continue on down to the daily, talk about actual levels. We'll pop those on. And what do we have on the docket, right? You can see that just like almost every other broad market index, here's your balance. Unlike the QQQ, we do have a candle that respected the lows. That's 197, we'll call it for round number's sake. As long as we're in this area, you're watching for the ping pong trade. And then if we break the lows, it's back down here to the double bottom. That's what we saw on the weekly, right? That's 187.72. Or it's a look below and fail, right back above. There's your target, top end of the range here, 204. If we do something like this, higher low, and then break the top end, we know that 208 is significant overhead, resistance trend line is significant overhead, and then we also have the 212, right? So there is a lot of overhead resistance that must be battled through if this is going to make a strong reversal. And again, let me illustrate where all of this is coming from. So resistance trend line, coming from the all-time high, there's touch one, we have yet to get back into it once again. You can see that 208 was support from in here. It's also, if I scrunch out a little bit more, support. It's basically the low end of the weekly range. And then we have a sub low, right? You get support here, support here, support here, here. That's where the aggressive selling stems from. That's the 212 level. So again, if this double bottom on the daily, this one right here is going to pan out, we need to hold this as a higher low at 197.15. And we've got to get above that 208 most importantly, and the resistance trend line. After that, we'll deal with the 212 when we get there. But one step at a time, 208 is your significant overhead resistance in the IWM. Based on what we have on the daily time frame, indecision bar here at the low of the range. Watch for the ping pong trade. If you're not, comfortable taking that, that's fine. Be patient for the break here or the breakdown here. If you are going to take the ping pong trade, place a stop here, targets the top of the range, then monitor for continuation. Again, if you get caught up in something that forms a lower high, an equal low reattempt in short proximity of time, that stop loss is going to save you because it's very likely that in that scenario, you do get the rotation here closer to 187.75. That's going to wrap up the broad market. Let's get into these companies. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every time a new video comes out. Kicking off our companies with Apple, what you'll notice here is just like the S&Ps, a fake break to the upside and right back down at the bottom end of the balance. Unlike the QQQ though, we are still holding up at this area of support. A little bit of an indecisive but slightly more bearish candle on the Friday session. Your pivot point to the downside is 162.50. If we break that, look out below. Our next support's coming in at 157 from prior daily here, but also intraday on that Thursday breakout. I can show you that on the hourly. If we come and look at something like this, you'll notice the only red candle holds that level at the 157. That's why it's the downside target. If we look at this 162.50 flush point, you'll notice I'm calling it a flush point very deliberately because we've already experienced the fake break to the upside, right? We're at the bottom of the range. We also have lower highs on an intraday basis from Friday. So be very mindful of 162.50 to the downside inside of Apple here. If you're intent on trading the ping pong move like this, right? Then stop loss has to go here. Look for the rotation there, and then trim some of your profits, right? I would really start to focus on day trades only. It's been incredibly difficult to get follow through on anything that lasts longer than the day time frame. So that's Apple in a nutshell. Let's continue along here and get into Netflix. What do we have going on here? Probably much more weak. Not probably, it is much more weak than what we just saw in Apple, right? You can clearly see that we have lower highs continuously being produced, and we're right back down towards the lows of the panic Thursday, the invasion day, right? So if this breaks, again, we're testing it in relatively short proximity of time, as in, compared to that right there, we're coming off of a lower high. Now we are 4 days aggressively down in a row, so I'm not sure I would take it on the first go here, but 352.67 is certainly going to be a flush point, and from there, we're monitoring for downside continuation. Again, I wouldn't press your luck on any of these trades here, but that does become attractive for a breakdown point, all right? If it is going to produce another lower high, I would love for it to do something like this and resist off of 376.80. It already did that on the Friday session with that upper wick here, so maybe it's even lower than that. If we produce any sort of lower high is what I'm getting at underneath that level, then fantastic. This is definitely, again, another test in short proximity of time. Look for that to break down. I would not be trying to play reversals here inside of Netflix based on the pattern that's unfolding. But if you are intent on trading long Netflix, if you start to see a hammer candle down here, fine, stop goes underneath the low of wherever that forms, long over the highs, and you're probably attempting this high right here, 396.70. So that would be the contrary trade based on the pattern that's developing and the fact that this is turning into a flush point. But, there's always opportunity at these levels to go either way. And given the current condition of the marketplace, I suppose I wouldn't call you crazy for thinking, okay, maybe there's some sort of bounce if we continue to play ping pong in the marketplace and these down moves are not really sustained. All right. So that's Netflix in a nutshell. Could go either way, but I would really start leaning towards the bear side given, again, let me just illustrate the lower highs, especially if another one is produced and we make that equal low attempt. That to me sets up a beautiful downside trade. If we just sort of put in a hammer tomorrow on Monday's session and then again, take out the high, I wouldn't call you crazy for looking for the long, but again, just please don't overstay your welcome. Maybe that's the theme of today's video. Don't overstay your welcome out there in the marketplace right now. Let's continue along and talk about Tesla. We talked about Netflix enough. That was a little bit, overdone there, but regardless, what's going on in Tesla, right? This one still well within the range of the 38.2 from the Fibonacci's. We've been talking about this level right here, the 815, 816-ish mark. It's the low end of the poor structure from here. Notice if I go to an hourly, right, and we take a look at this, that as we break down underneath this level right here, the 854, 850-ish zone, I was thinking that because we had relatively poor structure on the way up, that we would retrace it fairly quickly. And don't get me wrong, there was some retracement, but it wasn't a straight shot lower like I was thinking it may have unfolded like. So to me, this is maybe a little bit more bullish than I would have imagined, but please don't get overly aggressive to the upside until we can recapture that pivot point, right? The 854, it's so clearly now become resistance here and here, where I would only start feeling bullish again if we can take that out, confirm it as a higher low, and then you look for the top of the prior range here, closer to 888, right? So that's one potential scenario to the upside here inside of Tesla. If the lows break, obviously the move is back down towards 800, coming from this flag consolidation area here. It would also be a violation of the 38.2. We'll take it one step at a time after that, right? It's been incredibly choppy. Hopefully you've gotten the sense of that in today's video. It's not really worth forecasting anything further than just a couple of days, right? There could be crazy news that comes out of the overseas situation that sends the market this way if there's some sort of resolve there, or if the conflict intensifies, maybe it does something like this. So one step at a time, those are the pivots I'm seeing here inside of Tesla. As of right now, short-term pattern, yeah, no doubt about it. This is technically a bull flag, but once again, use that 854. If we're above, maybe start to lean on longs from there. If we remain below, be a little bit more cautious. Alibaba up next, and thank you guys for the feedback in last week's video. I think what we'll do is we'll wait for the Google sort of split, and then we'll see what the options volume looks like on the ticker once it's a little bit more in a price range that would attract higher volume, right? So we'll see. If it's going to do great volume, we'll add it to the list in replacement of Alibaba. There's also a huge push for AMD, so we'll see. One of those two will probably make it onto our list in the short future here, given that Alibaba continues to kind of be a train wreck and earnings did not really do a whole lot to save it. So that being said, let's at least watch it into this upcoming week. Again, it's bearish. You can see that we have a large upper wick inverted hammer off of the 104 flush point. We talked about that repeatedly in the pre-market live streams over the course of last week. We got the flush. We confirmed it as resistance on Friday. Watch out for 100. If 100 breaks, let's go out to a weekly time frame here and search for next supports together. We've got to grab a lot of time to see what we've got. Let's see. So we're looking for anything underneath 100. We'll come back into here. Next one that I can see is really going to be right there. Let's grab the other tool and put that into play. It's right here. And the reason I picked that is because prior resistance, broken, back tested, confirms as support, and then we're off to the races, right? So that's 85.50. Quite a ways to fall, right? $15 underneath us here inside of Alibaba if 100 breaks. And again, based on what we're seeing on the daily time frame, obviously the daily trend is firmly to the downside, and we clearly have resistance on the back test of that 104 flush. I would watch for downside. If it is going to produce a double bottom, something that looks like this, you know that the long is only back above the neckline, which is currently 110. And I would just remind you of where that's coming from. Strong overhead supply at that level, right? So I would be very, very skeptical of any up moves here inside of Alibaba. Next up, we have Facebook. What's going on in this one? Sort of failing the bull flag, right? If I zoom in, and adjust so we can see that. I know the price action is a little bit wonky here, but what I'm getting at is breaking down underneath the lows of the flag 202.50s. If we take out the Fibonacci's just to get a sense for where that 38.2 would have been, it was, a little bit further above the technical support around 202.50, but nonetheless, we're breaking all of that, right? We're underneath the technical support. We're underneath the 50%. We're underneath the 38.2. We're resisting at the resistance trend line from the flag. I mean, it just doesn't look great, right? So this is definitely a bearish type of pattern unfolding inside of Facebook. We know that the trend is pretty firmly down after the earnings debacle. Lower high, lower high. This is just, turning out to be nothing more than a lower high. If we get the equal low, then we definitely have an H pattern in play, right? Any lower highs subsequently after that turn this into a flush point if we can get 3 interactions at the 190, and we would look for lower after that. So in the short term, this strikes me as being bearish with the inverted hammer from Friday closing underneath the lows of the flag. I would look for downside to 190. If it's going to break the resistance trend line, only look to fill up the triangle, aka this one right here, and make a move to the top of the flag at 212.45, and then we'll reassess the chart from there, right? You really don't want to be fighting this daily downtrend too much as of right now. Full transparency, I mentioned this a number of weeks ago when we were breaking the first resistance trend line. I'm still holding some long shares inside of Facebook, and I am willing to average in at our next technical support way underneath around 174, 175. So full transparency there. It's obviously an underwater position, but that's the beauty of going in with half size whenever you initiate a longer term position, all right? That's Facebook. Continuing on with NVIDIA, what's going on in this one? More like the Qs, right? Clearly bearish activity on Friday, breaking down underneath the area of balance that was forming a bull flag. If this is going to turn into a look below and fail, as you know, this is sort of a pattern that we've been discussing, it's got to recapture that 233.60 fairly quickly. Then we can target the top of the range and the daily resistance trend line coming from the all-time high. That would be, interesting to watch because that would produce a higher low. Let's see if in short proximity of time and after some sideways activity, we can break that resistance trend line and then get the rotation really to the double top. I'm not going to focus too much anymore on that 257.50 based on the amount of time that we've spent in this consolidation. I would probably look for the double top, right? If it's going to hold here as a higher low, you would really start to expect the equal high to the double top. So again, that's 266.27. That's if it forms a look below and fail. If it does not do that, and again, it doesn't look like that's what it wants to do, but who knows in this market, right? It's very choppy out there. But if it's going to be bearish, right, which it currently looks like it is, based on the breakdown out of balance, your rotation is here to the daily support trend line as well as this horizontal area, right? That's going to be 216. If I scrunch up the chart to illustrate where our support trend line is coming from, it's the low. There's touch 1. Touch 2 was the Thursday gap down day right into it. If we get into it one more time in short proximity of time like this, after a lower high that never made it to the resistance trend line, I don't know, maybe it's a larger breakdown at that point in time, but as I've been saying in today's video, it's one step at a time in this marketplace. So for now, definitely look for shorts into this area and then reassess. If it's the look below and fail, those are your targets to the upside that we covered earlier. Continuing along and talking about Microsoft, this one is bearish. Right, no doubt about this one being bearish. You can clearly see the rejection off of the resistance trend line, breaking down underneath the incremental higher lows, a weaker close down at the lows as opposed to more of a doji body. And this one, the trade is short underneath this level here at the 285, let's call it 286 for round number's sake. That level is coming from, again, on an hourly, you can see this. There was your breakout point, right? We've already retraced this thin structure here. We're starting to form a bit of a bear pennant. If that breaks down, again, thin structure until we get into 275. So that's the bear trade here inside of Microsoft. Back to the daily, by the way, here. If that holds, right? So if this just consolidates and then starts to form a bit of a reversal, it's probably not tradable there unless there's some sort of intraday pattern that you can identify. But based on the daily, that doesn't really look like a tradable setup as of right now. Maybe if it's a hammer candle on Monday and then it takes out the high, the resistance trend line's the target, and 300. 300 is your all-important level to the upside in Microsoft. Before this one can become bullish again, it's got to recapture 300, right? You could even start to look at it like this. This is a bit of a stretch. Wouldn't be my first thought, but maybe inverted head and shoulders, there's your neckline. To me, it's really just a horizontal area, right? It was the flush point from here, resistance on the back test, resistance on the back test. 300 is the number inside of Microsoft before this flips back to being bullish, and your targets after that, 311. Then you can go from there, right? Reassess the chart when and if these larger moves do occur, given the current conditions of the marketplace. Last but not least, we have the beast, Amazon. What's going on in this one? Bearish, right? No doubt about it. This one is bearish as well, more similar to your QQQs, breaking down out of range. It gave us the warning on Thursday, and we talked about this in the pre-market live stream on Friday. The fact that the Thursday bar was a bearish engulfer, right? Look at how large the range is there. It takes back 1, 2, 3, 4 days worth of price action that was holding. We closed relatively weak underneath after a gap up. So the amount of selling pressure it takes to create a move like that is significant. It's something you need to pay attention to. We got the rotation lower on Friday, but we did support at that intraday pivot, the 288, or let's just call it 2885 rather, to enunciate the word. And you can see, again, that's your support in here. Formed a little bit lower, I suppose, in hindsight, but nonetheless, bear flag on the hourly time frame. If we can't really get any price acceptance that starts moving higher, then this is a short, right? Underneath that level, 2885, to get into the low from the Thursday session of last week, 2 weeks ago, I suppose now, 2791. If this does form a bit of a double bottom, I suppose there might be a micro entry. This is like for day traders, scalpers only. Don't overstay your welcome. Up and over these highs at 2923, look for the back test of the flush point here at 2985. All right, so that's one potential long opportunity, but again, back down to, or up rather, to the daily time frame. Nothing about this chart would really scream, hey, there's a massive reversal that's about to be underway. I suppose you could say a little bit of a longer, lower wick, but remember what we talked about on the monthlies. We can't discount the fact that we have a red body stacked right above that. All right, so that's our core list of companies. Let's get into these trade ideas. Quick reminder to hit the thumbs up button, hit the subscribe button, the bell button, all those buttons YouTube tells us to tell you guys about, and let's get right into these trade ideas. First one is on SQ for Block Inc. We brought this up in the midweek market update on Wednesday. Notice that we had an inverted hammer here off of a resistance area. It's also the daily 50 SMA. Notice that's been off for the course of the video. Moving averages aren't going to be incredibly helpful in this current market condition, so we just decided to omit them. Regardless, what do we have in play on SQ? Clearly, the gap fill is now in play. So there's a couple of ways to trade this one. You can either get short underneath the low of Friday looking for that gap to fill all the way, that's 96, or you can be a little bit more patient and wait for another scenario where we do something like this, resist off the 110, roll back over to fill the gap. Now there's two entries there, just like we were discussing on our broad market for the look below and fail, right? You can be aggressive and take it here with a tight stop just above, or you could be a little bit more conservative, wait for this activity, and then short the break of the low for the remainder of the gap. Not so interested in this SQ short trade if we pop back above that 110, basically the low from the earnings gap up day, and then we start getting price acceptance above, right? That's obviously not indicative of this gap wanting to fill. So that's SQ in a nutshell. Let's continue along and talk about BA for Boeing. We had this nice horizontal area of support that broke on the Friday session, and we have a descending channel in place as well, right? You can see that we had support, now we're coming closer to that area of support. So that's the downside target. And just like we talked about in SQ, there's a number of ways that you can play this here based on the break and retest. So you can either wait and be patient for something that looks like this, look to reshort that 187, noting that we have now all of this overhead supply here, and then look for the rollover. You could short the break of that low, look for continuation into the support trend line, and also this horizontal level, the 172. Now, where's that coming from? Let me bring us out to a weekly, and we'll just zoom in with the other tool quickly. You'll notice that in the past, it was resistance, and then as we gap up, that holds as support, right? So that's the importance of that level. It's a weekly gap. It's the top of the gap, so I wouldn't really push it, given the market conditions, that's the theme of today's video, any further than that. Sure, you could take off like 3/4 of the position and then monitor for continuation into the weekly gap, but that you're asking a little bit much, right? That's 158 to the downside. And I suppose if everything's going to hell in a handbasket, maybe that's a valid target, but one step at a time, one step at a time. Let's go down to the daily and talk about where this trade is invalidated. Obviously, if we do something like this, higher low, and then hook back higher through that, that's invalidating the short side. And instead, maybe you look at that as a weekly look below and fail. So something that does this and we're back in the range, stop goes underneath the higher low, right? So that's one potential scenario, but based on everything that we're seeing, it's obviously much more bearish than bullish in Boeing. Next up, we have Nike. This one is a 3-day flush point. You can see that we have this little area of balance and we're coming into the low end, right? We have very equal lows at 130.80. If it breaks, where's support coming from? Well, if I scrunch up the chart, you can see in the past we have 1, 2, 3 interactions at 126.70s. Could it get there? Is that like a reasonable target? Absolutely, right? If you think about range doubling rules, we're always looking for ranges, and if they double on the break, that's the forecasted target, the measured move target, we easily get to that structure at 126.71. So that's the downside trade here inside of Nike. I would remain interested in this trade as long as we remain underneath the midpoint of the range. And just based on a quick eyeball test, it's roughly 134. Any price acceptance down here strikes me as a lower high Flat lows, that's a descending triangle or a flush point, whatever you want to call it, look for the downside move. If we recapture the midpoint of the range and do something like this, I would sort of be patient and not really look for the long trade, just noting that we're in a little bit of a daily downtrend, right? You can clearly see we are moving lower. So I'd be cautious up and over that 137. Next up, we have KHC, Kraft Heinz, for our last name on the list, and this is a bullish trade idea in the face of everything bearish that we just discussed, right? You can clearly see bull flag consolidation also happening above a prior resistance point. If we break, you're looking for the day trade. Remember, don't overstay your welcome. From about 40 to 41, that's about $1 range. You can easily pick that up on a call contract, right? And then from there, monitor for continuation. Notice that we have thin structure on the way down. The next target is technically 43, so about $2 higher. Right? So $3 net move if this pans out to the upside, and that's completely reasonable based on the size of the bull flag, right? Anticipated move would take us to that area, and once again, 43 is also prior structure. So I like that to the upside here. Good relative strength in our consumer staple names. Let's also quickly take a look at the XLP for our consumer staples. And I want to point this out as well. Obviously, Kraft Heinz is in that category. Look at this resistance trend line that's starting to break on the end of the week. So if we get the follow through, targets the highs for a filling up of the triangle, right? And that would obviously be a good thing for the KHC trade to the upside. That's really going to wrap up this week's video. If you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our secondary channel is linked down below in the description, where we do a couple of video ideas every single day. And with all of that being said, I wish you a green trading week.